All right, Evan, welcome back for another episode of This Weekend Charts via Carnival Trades and Wall Street from Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivaltrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week. So markets here rebounding pretty nicely. So last week we talked about this breakdown here, and we put our trend lines back on. So we had that level, and this is why September can be such a tricky month to trade. We had that level right at 5,500. We did close decisively below that on Friday with a nice flush, and right now it looks like it was a pretty good liquidity grab. So right now we've got a higher low in place. Monday, Tuesday, kind of inside day, and then Wednesday, wild action on CPI. So just really the market kind of trapping everybody on both sides. If we look at the futures here, you can see in the pre-market a big whipsaw. Well, we're up higher. We popped and then we dropped hard, basically back to the lows of Friday, give or take 10, 15 points. And then we had a huge moonshot, and we've been mooning pretty much ever since, although the market is now coming a little bit off the highs here as we get into the end of the day here. But overall, a very nice recovery for the market. And again, this is why a lot of people kind of just tend to stay neutral for September. If you can't handle the volatility, a lot of the time it's best to sit on the sidelines. It makes for a great day trading market, though. I know we've had a very good week here in the trading room this week, but the volatility here is very high. Again, typically when you get a technical breakdown of a big level like that, you're going to at least see some follow through. I know I talked about 53.40 to 53.25, and the market had other ideas, so we didn't even go down there to test that. And we were able to push back up. And this is despite a lot of things, a lot of narratives breaking down, right? Look at the USD JPY. So we're below the level that we were at on August 5th on the dollar yen. And markets are basically, spitting distance from all-time highs here. If we look at the Dow, if they pump this in the next, hour, they could probably get it there. I doubt they will today, but it certainly could get there. Now, again, like I said last week, they are talking about, the market's up because it's looking forward to, the yield curve is inverting, and they think that the market or the Fed is going to cut by 50. Those odds went up again. I'm not in that camp. I don't think that's happening. Personally, I think a lot of this can be explained simply due to kind of squeezing and just positioning. So again, we can see here, if we look at sentiment, bulls dropped pretty precipitously this week versus bears upticking quite a bit. And this is as of last week's data, Wednesday through Thursday. And again, like I say this all the time, it's very hard. There's so many people out there who are trying to front run the recession. They're trying to hit a home run. They're trying to be long bonds, short stock, and they're basically betting on a slowdown. And eventually we will get a slowdown, but I think it'll come after everybody's been painfully removed from the market. So these things can squeeze higher than you think. And usually the top comes in once everybody is given up on it. So just some food for thought there. But again, the market, like I showed last week, the market does not want 50 basis points. That's not why we're rallying. I think we're rallying more to squeezing than anything. A 50 basis point cut, that signals Fed panic. So if we got that, I would actually start to get kind of bearish, honestly. But right now, again, markets here, stone's throw from the all-time high, like we talked about, 56.69. We're about 50 points away. We are off the highs of the day too, so we were up a little bit more. There is a little bit of resistance at 56.50 as well. That's just before that. And then again, I guess they can try for that 5,700. They might do it. We have a Fed meeting next week. That could be an excuse. The algos could pump it up there, but I don't really see much upside past that currently. It doesn't mean we can't go higher in the future, but in the short term, I don't really think we're going to go much past that. I do think we need to get a little bit more cautious after that September options X, after that Fed meeting. I think there's potential for a little bit more risk and a lot more turbulence coming into the market into the fall. So that's kind of the base case right now. Again, nice squeeze here, 5 days in a row, straight up. Triple Qs here, take a look at this trend line I drew in. You're actually seeing a tightening range here. I know there's a lot of lines on here, but we're right into this top side trend line and we're backing off of that there. So who knows, maybe we pull back early next week, maybe we pull back off it. On the Fed, But overall, you do have a higher low here. And again, we talked about that 618 Fibonacci retrace, which, you know, it basically got touched, right? For all intents and purposes, that's touched. That's close enough. And it did get a nice bounce off of that. So tech holding up a lot better this week. We saw Nvidia catch a nice rebound. It is fractionally lower today, but it had a nice rebound throughout the early part of the week. Look at Broadcom. Look at that rebound there. Retested the 200 moving average and a nice bounce. So again, tech getting a good bid here finally. You know, Mag 7 was having a decent week. It's been soft lately. Google's also been soft, nice rebound. Amazon's had a nice rebound. You got Netflix. So the usual suspects acting a little bit better here, although they've been kind of weak in the last couple of months. So they are leading the market higher right now. Now the Russell 2000 started out the week very soft, but last 3 days, very good rebound here. We talked about the 210 handle, 210.50, and it is above that now. And you're back above that so we had this breakup bar low here, right? And then we broke down, we're back above that. So Russell's back above all the moving averages now. And looks a lot better. Weekly, a lot of chop, really wide range here. And then on the monthly, again, big breakout bar and just inside testing. So we're just seeing testing candles here on the Russell monthly. But very wide range chop and nice recovery there. Again, obviously rate cuts, good for those companies. It's not going to do much, you know, right away, but they're being priced a certain way right now, and that's just the way, you know, you got to read it at the moment. Dow here up to 292 on the diamond, so about 300 points for the Dow, and as a chance, well, it's basically close to a new all-time high. Not quite going to get a new all-time weekly closing high, it doesn't look like, but either way, it's right there, and the Dow continues to hold up. Again, we're into September. The Dow is holding up better than most of everything, and that makes sense as it's a defensive. SMH here up 1.25 today. Still, again, so you can see the laggard ship, right, from semis, right? So still not above that bar from 9.3 from the beginning of the month, whereas you look at the SPX, we have cracked above that, and the QQQ has cracked above that as well. So semis still, they're bouncing, but they're still laggards. And we can actually, you know, we probably, not we can just do this right now in real time. Yeah, we can probably draw that trend line there, similar trend line on the Qs. Let's see if we can get a better angle there. Go to the high, yeah, so you can see right there, there you go. And so much of the Qs is the semiconductors anyway. Interesting stuff there. IGV continues to be my favorite area in tech. I really like cloud. Again, nice little kind of bull flag setup there. And despite the slice last Friday, it's right back up. And again, I continue to like this on the weekly and even more so on the monthly. I think this is a nice base here. And I think cloud, you know, this might be the next hype sector if this market continues going and semiconductors don't take back over. I think cloud is where you'd want to be. But that continues to outperform. Transports here are nicely green on the day. I told you guys about 15.8, right, last Friday. And that's where we're at. So, well, I should say we pierced it, and then we backed off. But that's the level it went to, and that's the level it pulled back from. You still have kind of an inside pattern here, kind of like a down move and then sideways, and then you have this up move. We still need to get back above 15.9. So if we can clear that breakdown bar on a closing basis, I like the transports a lot better. But, you know, good bounce this week. And again, they're trying to hang in there. Rates, another down week here. And you can see the 2-year here, that continues to be soft. We're going to get a weekly close below the low. Same thing on the 5s. And then 10s and 30s look like they're going to do that as well. I'm still not convinced that they have a ton of downside here, but I will say I'll give the bond bulls credit. They're going to close the 10-year below 3.7 for the first time since, well, you got to go back to May 23. Or it looks like we just closed below it right here. But yeah, basically May 23. And the last 6 weeks we've been right there, and they haven't been able to close it below. So this week they're going to be able to do it. I'm still skeptical here. I mean, we're going into a Fed meeting, and it just seems everybody wants to be long bonds right now. And we know the Fed is cutting. So it's not like this is, jumping out at us here. It's not a surprise. So I just be careful here about being super long bonds. If you're in the money, just protect it. That's my 2 cents. Could be completely wrong, but that's just what I'm seeing right now. And then obviously the long end holding up the, better with kind of like a double bottom here essentially. And then there's the tens, which is slightly below double bottom. Home builders will never go down. So XHB here, that's going to be, it looks like a new all-time closing high for XHB, and it looks like that's going to be on the weekly too. So you can't keep them down. Rates up, they go up. Rates down, they go up. So home builders just, they're one of those sticky sectors here. And, great move here for XHB. What can you say? Up 3% today. VNQ up 67 cents. Watch though. So just be careful. This is now, you got a little bit of we call this an evening star. And, that refers to, you have a big trend here. And then when you have a gap up and a doji, a lot of the time that can signal a reversal. We didn't quite make it to the 618. If we did, I probably would be a lot more cautious on it. Might even be like a quick short even if we had gotten to that 618, but we're not quite there. Let me just take a look at, I just want to take another look here as I'm doing this in real time here. This is XLRE. It's essentially the same thing. Yeah, so XLRE did get to the 618. And it has the same look. I think there's an IYR too. These are all pretty much the same ETF. Yeah, so the IYR got through that. But just be careful. Little evening star setup doesn't mean it's going to crash or anything. Just means that it typically can precede exhaustion. So just be aware of that. All right, XLF, nice rebound after the slice earlier. JPM took a big hit on Tuesday, and little careful. Be careful with banks here. XLF did come nicely off the lows. You can see Berkshire here actually trying to hold that 450 level. I talked about that last Friday. It got a nice bounce off of it. Not the greatest follow through though. But XLF still hanging in there, still above the 50 MA, and the trend is up. So just be aware of that. KRE with a nice bounce today too. ABE and broker dealers. Broker dealers still so strong. So broker dealers loving the volatility for sure. All right, oil here. Again, a lot of people trying to front run the recession with oil. Same kind of setup. It's flat today, but again, we got down to the 66 handle. I talked about that last week. I did not play this. I just don't have a good read on it. The trend is now down. Just be aware of that. But it's holding on to this area here. I think there will be a huge buy in oil, but I don't think that it's coming just yet. I think that's coming soon, but we're not quite there. I might even be kind of expecting kind of a panic down at some point, and then I think it's going to be a huge buy. But right now, resistance at 70 and then 72. We'll just leave it at that for now. And then you got your support at like 64. XLE did get a little bit of a bounce this week, but nothing too inspiring. Same thing with XOP and OIH. Nice tail candles, though, on Tuesday. We'll see if they can follow through. OIH hit my other level here at 260 or just close to that weekly 200. So, and it's got volume, so maybe it has legs. But we need to see it firm up a little bit more to confirm. But they are bouncing. CCJ with a nice bounce, too. So we talked about that, and I said watch for maybe a W bottom, and it's trying. It's trying right now. There's a fib right there. You hit the 618. You want to see consolidation here and then another advance. So it looks a little bit better, and I like the URNM looking a lot better, and I like the NJ finally. Again, I didn't like last week's close, but I like how you just negated it like it was nothing. So uranium's still choppy, but it's hanging in there all right. Definitely better. And then nat gas, again, they gapped it down Monday, and the short sellers got hosed for once. So they gapped us down Sunday night, and then the dip was bought, and we're above my level. I told you guys 228. There you are, and we're going to be above that by the end of the week. 240 was resistance. That was the next level I talked to you guys about. Right there, you can clearly see it. But you got a nice W here. So if this can set up a flag or a pullback and a higher low, I think it goes to 250 and maybe higher into November. So I think nat gas is looking pretty sharp here. And I think dips can be bought for the next month and a half to 2 months. Dollar index down pretty sharply today, but it did come off the lows. And that's potentially now a third higher low there. So if that can curl back up, we're looking at, 102.20 to 102.50. If it breaks down, again, I'm just looking at 99.50. But dollar, it's being sticky. It's being resilient, kind of like the 10-year, which I was just mentioning. Yeah, it's down, but it like, look at how hard they're pushing this to try and get it below that low, and it's like they can barely make lower lows, right? And they can't follow through when they're doing it. So that's why I think the short dollar long bond trade is a little crowded here. It looks like they're just trying a little too hard. It might need to start going the other way. Gold here was the star of the week, and really precious metals across the board. And I'm going to tell you guys about my palladium here too. But gold up 1.17. That's a new all-time high. I told you guys 2610. That's where we're at. We pulled back intraday a little bit, and now we're kind of back up again. 2610. That's not a short level. That's not a sell everything level. It's just a price target. It could overshoot that. I do think there is a little, just from my own anecdotes here, there's a little euphoria kind of in the short term here, just from like what I'm seeing in my feeds. And we're also pumping ahead of the Fed, so we're pricing in a really dovish Fed with gold. But it is acting well. GDX, again, new 52-week highs. I think that's multi-year highs. You can see here, gold miners versus gold. I like the higher lows, and it's getting ready. I love the weekly, right? Actually, we can go to a monthly here. And I'm going to use GoAU because I like this pattern. Take a look here. So we broke out up, and now we're just consolidating and starting to push. I really like that pattern. Really nice pattern on the weekly. SIL, same thing. Look at this, up 5% today. I think it was up like 7 or 8% yesterday. SILJ up another 4 today. So these are acting well. Silver with a big move up 2.8. It did come off the highs. Watching this channel now as well. It might stall out a little bit, but that pattern looks good. And then I've been telling you guys here, platinum. So 1,000. Next stop is 1020. Good move there. And I've been telling you guys this for probably a year. But palladium, this looks like it's off the ground now. So we're above the 200 moving average on a weekly closing basis for the first time since October 2022. So that's 2 years, guys. This looks to me like a big fat rounded bottom, and it's going up on volume too. I think palladium is ready. I already trimmed some of my gains on this as a swing trade, but I think again, if this catches up to gold, I mean, you're talking about a 3-bagger here easily, and that's just on palladium futures. That's not even on any other leveraged vehicle. Sabina with a big move today too, up 8.5. Before I get to copper here, I want to talk about Mosaic, because I know I'm going to get 1,000 comments on that. Yes, I did buy, and I've already gotten profit off the table on this. So if you guys recall, I've been talking about this level here, $24.50 to $25 for probably about 18 months. Every time someone asks me about it, I say, yep, that's where it's going to go, and that's where you want to buy. And it got there. So it got there earlier this week. We did take a long with that, and we're nicely in the money. We've already got some profit booked on this, and I think it can go higher. I like the weekly candle. I like the volume. I like the tail, and the monthly maybe shaping up too. So I do like MOS, and good move for there off of that low. Intrepid up 1.5. I haven't talked about these in a while. NTR also holding that double bottom too, but MOS, that was the big level, and that was the big one. So if this can work its way back up, above these pivots here, above 27, if we go back to a weekly, I think 30 to 31, maybe 32 could be in play next. All right, copper here. So copper is close. It's not above 422.8 yet, but above that on a closing basis negates that red bar, and that's good. You have possible higher low here too. A lot of conflicting signals, right? Oil down, right? Copper up, yield curve normalizing, bonds, doing what they're doing. So, again, it's recession trade is very tricky, right? Today we had inflation expectations on Michigan consumer sentiment, rise in the the longer term, right? It's very tricky here to play this stuff. But either way, nice bid for copper there, without going on too much of a tangent. Bitcoin technical positioning improving a lot. So I would like to see us above 60,000, but good bounce here this week, and it's acting well. So again, you guys know my thoughts on this. It looks like a big fat weekly base, and I think when this goes, it's got some serious legs. But nice rebound there. Need to get back above 60. And then, back to 62, 63 area. So again, markets are, holding up. Very nice recovery here. September is a volatile month. I think we have, several more weeks of this type of chop where we're going to get people calling for all-time highs, and we're going to be calling for crashes. 3 days ago, people were calling for crash. Now they're all calling for, 6,000. I think we're going to see those wild swings in sentiment. It is an election year, a lot of populist stuff going on, and I don't think we've seen the end of this turbulence. But right now, very impressive recovery here for the market. And we'll leave it at that for now. I think 5,700 is probably about it in the near term. So anyways, guys, I'm going to wrap it up here. Again, you guys take care. Don't forget to come find Jason on Patreon. Come find me on carnivoretrades.com. And I will see you guys all next week.